Investing in rental property can be a smart move when you make smart decisions. In the next few minutes, we'll talk about the investment strategies investors are taking in this economy and what you should look for when choosing a rental property. We'll also review a few major factors in your success, especially tenant screening and retention, as well as reducing your risk and liability. Finally, we'll discuss what you can expect from the professionals at Real Property Management. Before we start, you may be asking yourself, why should I listen to you? As the nationwide leader in residential property management, Real Property Management has managed over 100,000 properties around the country over the past 25 years. With over 220 offices nationwide, 2,000 employees, and locations in every major metropolitan area, we currently manage over $5 billion in assets. Put simply, we know rental property and are happy to share with you some of what we've learned so you can make a better business decision. With the buy and sell investment strategy, investors rarely have to worry about long-term property management issues. Many savvy investors in today's real estate market are looking for a reliable, stable, long-term investment and are turning to the buy and hold model for 5 to 7 years or even longer. This approach requires the investor to not only understand the local market and to successfully select and rehab the property, but also requires a strategy to successfully manage the property over the years in a way that increases the return on investment while preserving the property for future sale. Owning rental property is a great way to diversify your portfolio. Single-family rentals account for over 1/3 of rental households. The number of single-family rentals has increased more than 37% in the past decade and is expected to remain high into the next few years. Although house prices have increased lately, the national average gross rate of return is more than 11%, and nominal rate of return is projected to exceed 7%. In summary, single-family rentals is a vibrant industry and underappreciated by many investors. So let's talk about the first point, selecting the rental property from the perspective of successful long-term management of your rental. Even though we're not in the business of investing, we've learned what would make a great rental property based on our experience in managing properties. This is real estate after all, so location plays a critical role in the amount of effort required to manage the property. How good are the schools? How close is public transportation, shopping, and amenities? Renters look first at these things. Different cities have different ordinances and regulations for landlords. Some towns levy heavier fines for violations, while others are less stringent. HOAs add their own regulations and potential fees for violations that can add additional time and hassle. And finally, not all markets are created equal, so look in neighborhoods with lower vacancy rates, higher rents, and where values are appreciating. This is where local expertise is particularly important. After location, the details of the property itself can help the success of the rental unit. With more families seeking to rent long-term, seek out single-family homes that support a family lifestyle, with 3 or more bedrooms and a fenced yard. Fewer customizations and a home which has been well maintained and has upgrades will help you keep your maintenance costs down and attract tenants. On the other hand, avoid small or quirky layouts, unfenced yards, and busy streets which can turn off prospective tenants. Also avoid older homes in low-end neighborhoods, which can be much more expensive to maintain. Once you've selected your rental property, your investment success rests on a few critical factors. Above all else, vacancy days must be avoided, as every day is money out of your pocket. This means leasing quickly to the right tenants who will stay long-term. You must also preserve the property, or it will lose value over time. Paying retail for that maintenance will hurt your bottom line. You must avoid the liability, risk, and fees due to neglected details and poor management. And finally, tenant turnover, either due to poor initial screening or poor customer service, directly impacts your vacancy rates. So let's talk about these final points a little more. Proper tenant screening from the beginning can save you a great deal of time, headaches, and lost value down the road. Minimize the risk of property damage and of tenants who do not pay with a thorough background check. Make sure you comply with discrimination laws and the Fair Credit Reporting Act through the process. Require an application for every tenant over 18 years of age and a verified combined income of 3 times the rent rate. While poor credit is increasingly common in this economy, avoid evictions and judgments and request written explanations of late payments. Verify at least the past 2 years of rental history with previous landlords and ask if there was any major damage to the last house or apartment. Finally, do a criminal background check to screen out those with a history of drugs or theft, and especially violent or sexual offenders. Tenant retention is the most important factor in achieving your investment goals. A common misconception among landlords is that it saves them money to avoid completing repairs, or to simply make the minimum repairs to avoid fixing the problem correctly. On the contrary, responding quickly and thoroughly to maintenance requests increases tenant retention, which helps you avoid the cost of vacancy time and the associated marketing costs and make-ready expenses. Plus, ignored problems usually become more expensive to fix over time. Your tenants are your customer. Keep them happy, and you will see the result in your bottom line. Those of you who are familiar with residential property management understand how complex it can be, particularly when it comes to compliance with local and state laws and ordinances. The most daunting issue for new rental property investors is compliance with all of the codes and ordinances that apply to landlords. Property codes can require locking, safety, and protection devices at the owner's expense, as well as other items. Failure to comply can mean heavy fines if repairs are not done in a timely manner and the proper documentation is not complete. Add in the risk of litigation and lawsuits, and the need for careful management of your property becomes all too clear. In fact, as you can see from this list, there are dozens of applicable laws, ordinances, regulations that carry potential risks and financial liability when you own rental property. It is critical that you or your professional property manager remain constantly current on all applicable requirements to help you avoid costly mistakes. If you do hire a professional property manager, what can you expect? From Real Property Management, you can expect professional, comprehensive service covering every aspect of the property management lifecycle, always with a focus on helping our investors improve their cash flow and stability while avoiding costly mistakes. Our owners can keep tabs on their property 24/7 from anywhere in the world with their online reporting portal. We help our owners navigate the complexities of owning rental property while placing more qualified tenants faster, saving them money on maintenance and acting quickly to avoid lost income. Plus, our fees are cost-effective and designed to end up saving owners money long-term. We charge a simple leasing fee to fill the vacancy and a flat percentage of the monthly rent rate to cover the majority of services. We tell you what you can expect, and there are no hidden fees. In the end, our goal is to pay for our services through more efficient, careful management of your property. For example, filling a vacancy 2 weeks faster with a property manager pays almost half the typical management fee for the entire year. In addition, we offer additional optional services for the convenience of our owners, including eviction protection and preventative maintenance. So here are the top 5 things to remember when you are investing in rental property. Put simply, rental property is a smart financial investment, but all too often, investors don't realize the complexities of managing that investment. Put in the time and effort to do it right and avoid costly mistakes. More and more investors are finding that the simplest, safest, and most profitable approach is to hire a professional property manager. Real Property Management is the leader in the industry because we have mastered every aspect of the property management life cycle to bring investors the best return.
What does Real Property Management do for you? Advertising, marketing, prepping, inspecting, showing and screening, reviewing, accepting, selecting and signing, briefing and moving, maintaining, inspecting, enforcing, responding, pricing and saving, communicating, emailing and calling and faxing and stating, coordinating, scheduling, unlocking, fixing, accounting, reporting, funding, filing, and nixing, complying, renewing or moving, collecting, evicting, assessing, rekeying, and ever repeating. And meanwhile, we're training and ever refining, always running to keep vacancies ever declining. Because Real Property Management means oh so much more than cashing a rent check. Oh no, so much more. The discount shops say they can do all this too. Without staff, systems, resources, how can that be true? Tens of thousands of investors nationwide know when they need real management, just where to go. We're proven and trusted winter, spring, summer, fall, from major catastrophes down to the small. So if you own rentals, grab the phone, make a call. Real Property Management. We handle it all.